Hello again, and welcome to another short educational video from New Century Planning. My name is Bob Ryerson, and I'm the founder of New Century Planning. Today we're going to talk about why everyone should own some physical precious metals in their portfolio. And I am pleased to welcome colleague and friend Andy Schectman, who is the president of Miles Franklin, which is a, 32-year-old large established precious metals dealer. Is it 32 years now, Andy?
33 in about 3-4 weeks.
Wow.
February we hit 33 years.
Wow, congrats. So good to see you, and thanks for stepping in today. A lot to talk about. We want to keep it educational, but let's start out by talking about the current state of affairs in the precious metals markets. We know that pretty much all commodities, all raw materials are up at 42-year highs, and yet if we look, we see that gold is down a bit from its high, a little 5 or 10, but silver and platinum are down 50. How can we explain that? How does that, because I'll tell you something, we have people sit here at the conference table who are, generally not familiar with the markets, and they know intrinsically that that doesn't make sense when we show them this chart. So what's your comment on how that could be?
Well, and if you look at, and it's a fair question. First of all, Bob, it's great to see you. Great to be here. The last 3 years have kept us apart. It's great to even be here with you on Zoom and appreciate the invite.
Thank you, yes.
We are in a dollar-centric environment where everything that we value is not done so arbitrarily, I guess you could say, but it's valued in the light of the dollar. Let's take a step away from the dollar, which reached all-time highs or multi-decade highs in 2022. And let's go to Europe for a moment. In the United Kingdom, gold was up over 10% for the year. In the Eurozone against the euro, gold reached its all-time high last year. In most currencies around the planet, gold is at all-time highs. It is in the light of an overly extended, overly valued, and I think unjustifiably strong US dollar that makes gold's actually almost to the penny flat performance in 2022 seem a little bit skewed. Silver was up 3% in dollar terms, like about 80 cents in 2022. But let's put that in proper perspective. The last time the dollar was as strong as it is in terms of its dollar index, silver was under $5 an ounce. So all things being considered in the light of a ridiculously strong dollar in 2022, both gold and silver really held their own. In fact, both outpaced the stock market, both outpaced the bond market, both outpaced the real estate market and the crypto market. So even though the strength of the dollar skewed the relative value in dollar terms, not so much around the world, it's hung in there. They've both hung in there. And as the dollar starts to drop, as we've seen recently, as it's turned over, we're seeing gold and silver start to react to that. So yes, it didn't perform the way many people thought it did, but I take great comfort in seeing both how well it hung in there in the face of a multi-decade high dollar, and how well it's fared against just about every other currency on the planet. So it'll have its day, and when it does, it will come in the light of a dollar that is losing ground from its lofty highs.
Right, and let's talk about that because that's a great point. Think of how amazing it is that the dollar is as strong as it is. We hit 31 trillion in debt on October 4th, up a trillion in 8 months. We have insane obligations, a rapidly aging population. So I think you and I have used the phrase the cleanest dirty shirt in the laundry. The fact that the dollar is strong just shows you how bad these other major currencies are. But what I was trying to get to is it's been about 12 years, almost 12 years since gold and silver had their big bull run. The government has printed the COVID thing. They printed 6 trillion in 24 months. We recently had a 1.7 trillion omnibus. There's no pretense anymore about trying to control spending or let's balance it with tax cuts or whatever. So it's, I think you and I have used the phrase, if it's a hockey stick, we're up on the handle of the hockey stick here. So it's simply not sustainable. And I think in light of that, we can't think of any other major raw material commodity that's negative from 12 years ago, except for gold and silver because of this dollar thing. And I would venture to say, without going down the rabbit hole, 10 or 15 years ago, if you talked about a silver manipulation, they looked at you crazy. After that, it's been in the papers, there's been prosecutions, and traders have gone to jail. So, I think if you wanted to comment about that, I think that's part and parcel is an effort, I guess on the COMEX mostly, to keep it shorted and keep it suppressed, right?
Very much so. Look, gold and silver aren't commodities as they would like us to believe. Gold and silver are monetary metals that are a mirror reflection of the strength of the system, strength of the whole US dollar hegemony. And so, in an environment where gold being the barometer against the health of a currency, it is in their vested interest to keep the price low. But look, let's just say that the price of gold and silver being what it is being betrayed by the drawdown or betrayed by the manifestation of the vault drawdowns across the globe. In other words, big money is, yes, they have been suppressing the price of gold and silver because what it really signals is that the emperor, wears no
Has them,
clothes,
right?
or the Wizard of Oz, the little frail guy behind the curtain with the big voice. But what we're seeing is a massive drawdown, Bob, in supply from the biggest exchanges across the globe. So let's put it to you this way. The big money has lots of money, paper, and they can suppress the price. But in that environment, number one, the central banks accumulated more gold this year, in 2022 rather, than at any time since 1967. It's not just gold, it's silver too. The Central Bank of India imported 300 metric tons. That's a third of global mine supply. That's a massive, massive, massive amount. The COMEX market, where the price is set in the United States, in one day, about 2 months ago, witnessed 45% of all the kilo gold bars delivered in one day off the COMEX that backed the mini contract. That's about 26 million ounces delivered in one day to one entity. Who's got that kind of money to take possession of 26 million ounces of gold? The drawdown in supply of silver off the London Metals Exchange is at the lowest level ever that it's been in recorded history since they started keeping records on the 140-year-old London Metals Exchange. And on the COMEX market, if we take all of the silver in all of the COMEX vaults, there's about just under 300 million ounces. We've seen a 50 million ounce drawdown, really, and most of it in the registered category. Now, without taking such a deep dive, let's just say this. The COMEX market is where the price is set, right? And all the commodities. There's two categories. There's eligible and there's registered. Eligible are bars that could be sold if someone wanted to. Like, I have a big account at Brinks JFK, and those bars are eligible, meaning they're inside the COMEX ecosystem and they are validated as being authentic. The weights and the measures and all of that stuff, they're eligible. So if Elon Musk said, I want to buy silver, I could transfer it to the registered category. Registered category are the bars that are available backing the contracts for immediate delivery. The drawdown in COMEX has been almost entirely in the registered category. In fact, since Silver Squeeze in February 2021, we have witnessed somewhere in the neighborhood of over 100 million ounces taken off of the COMEX exchange in a year and a half, in 18 months. The majority of it is a drawdown in the registered category to where there is only 30 million ounces or 36 million ounces in the registered category. Those are the bars that are available for immediate delivery. What makes that seem so small is witnessing India take possession of 300 million ounces this year, 10 times what is backing the price setting mechanism of the West. So let's put it all in perspective. The central banks are buying more gold than at any time in the last 55 years. The London Metals Exchange, the granddaddy of all the exchanges, has witnessed a massive drawdown in all of their commodities. Zinc down 90%, aluminum down 75%. Just was announced that China has 20% of all the aluminum stockpiles in the world. Where do you think this stuff is going? Silver being drawn down off the exchanges in record quantities, and yet India imported 300 million ounces. Where are they importing it from? I wonder. The COMEX, the LME. Where'd the aluminum come from? The LMEs. Well, let's talk one more thing about those kilo bars. Who likes the kilo gold bars? 26 million ounces. The Chinese prefer kilo bars. Where do you think it's all going? When it leaves the ecosystem, when it leaves the COMEX ecosystem or the LME ecosystem, that means you've lost all liquidity on a giant 1,000-ounce bar or a 100-ounce gold bar. They don't care. It's a one-way ticket, not coming back. They don't care if Elon Musk says,
Right.
pay a $20 premium for your silver bars. They want it shipped. So the bottom line is simply this. the biggest money in the world is front running what is coming by suppressing the paper price and accumulating the physical while no one is looking, because everyone is obsessed with the paper price. And what is betraying the paper price is the massive drawdown in the vault supplies, because if value was an indication purely of or the price was an indication of value, then who the hell is draining the largest supplies of gold and silver on the planet? You have to be ultra sophisticated to be able to take delivery of COMEX bars and LME silver. This is not something that the average person is doing. These are central banks, sovereign wealth funds, large commercial banks. You're talking the most well-funded, well-informed, influential traders on the globe are using the misdirection of price as a tool to accumulate what is vast amounts of gold and silver, and it's highly unusual. We've never seen this kind of drawdown ever in my 33-year career off of these exchanges, and I think it is something that really backs what you're trying to say here, that the demand is far greater than the price will be.
That's a great setup. Thank you. Because let's talk about that. So if the smartest and largest money in the world is accumulating gold and silver, by the way, I saw some articles recently. China also has enormous amounts of oil and corn and wheat, and they're stockpiling all raw materials, as we know. So we know that 50 years ago and back, it was very common for everybody to have some gold and silver. And in certainly the last 20 or 30 years, the paper has been so good that gold and silver are very, very under-owned. And you and I have been on a multi-year effort to try to get people to own some. So if the smartest money is doing that, that means that our clients should have some exposure. Can you talk about how small the typical historical exposure versus today, and what that would mean if we just go back to the normal historical exposure? These are small markets, particularly, and the other thing we've got to get to is physical versus paper. But can you speak to the impact that zillions of dollars out there, if a little chunk of it flows into the metals, what can happen from today's levels?
If you go back to 1980, 40 years ago plus, the average percent allocation to a metals portfolio was 8%. And if you look at where we are today, it is estimated at 0.5%. If you take a snapshot of the asset allocation from Joe Sixpack all the way up to the Harvard Endowment Fund and give it a percentage allocation to precious metals, it is believed to be 0.5%. So from 8% in 1980 to 0.5% now, the average or the mean of the past 40 years is 2.5%. So that would be a five-fold increase in demand if we just get to where we are now, or from where we are now to the average of the past 40 years. And so, I think one of the things that I have learned throughout all of the years I've been in this industry is that the biggest money, the smart money, closest to the information, front runs trends. It's kind of like this picture right here. This is President Roosevelt and the executive order to confiscate gold. And I've become very close friends with the largest importer of pre-1933 gold coins. He lives down here in Florida with me, and we have long talks, and basically said to me, listen, Andy, when gold was confiscated in 33, all of the people who knew Roosevelt, knew the politicians, knew this was coming, they all mysteriously sent all their gold by steamship to safe deposit boxes in Europe and in England. And that's where he imports them from now. They've been there since the 30s, because the people closest to the information know what's going on. So, if you realize, for example, when we talk about gold being reclassified a tier one asset, the only other tier one asset in the world, that happened in 2019. But in 2017, the central banks of Europe started repatriating their gold from the New York Fed and going on a massive buying spree. In 2018, they bought more gold as a group than in the 60 years previously combined. And then in 2019, those numbers were up almost 100%, and then it got reclassified. What I'm getting at is that the people who are close to the information, do you think there's any coincidence that they repatriated their gold 2 years earlier, went on a massive buying spree for the next 2 years, and then it got reclassified, the only other tier one asset in the world? Do you think there's any coincidence that they sent their gold off to the SWIFT safe deposit boxes before it was confiscated? And do you think there's any coincidence that the central banks are buying more gold right now than at any time since 1967, and silver, and the commodities? Do you think there's any coincidence that the sophisticated money is quietly while using price to misdirect everyone who only looks at price. They're draining the largest exchanges in the world. What I'm getting at is that the big money knows what is coming. The big money is de-dollarizing quietly. We live in a world where, you and I grew up in a world, Bob, where we went outside and played when we were kids. And when we were young adults, we went to a payphone if we had to call our girlfriend or our parents or our friends, and we knew everyone's phone numbers. And you had to watch the evening news or read the newspaper to get information. Now, bang, it travels like that on your phone. Oh, geez, and information travels so fast that they have to suppress price because it is the main tool of misdirection. It is the main tool for them to misdirect the public so that they can de-dollarize without competition. But what I would simply say to you is that the reason the allocation is so small is people haven't caught on yet, but the biggest money in the world, you can see by their movements that they are preparing for something, and they are front running what is coming, and they're using commodities to achieve that, and the suppression of the price and the rhetoric to allow them the time before everyone catches on, because their smartphone just told them gold's going to the moon or silver's going to the moon. They're using that suppression of information and price to achieve their de-dollarization. And it's the same pattern that we see over and over and over again. And the truth of it is, this is why so few people succeed in investing. This is why there's a whole school of investment ideology called wave theory, where people's human emotions base the direction of the markets. Fear and greed. Right now, people are not afraid enough to wake up to see that we need to mitigate our exposure to the US dollar. So anyways, a long answer to a very poignant question. The bottom line is that they have a very, very small allocation, if any, to precious metals. And but the biggest money in the world, you can see quietly, is greatly increasing theirs. I think you have to follow what the big money is doing and tune out the noise.
Great. So I agreed. Let's talk about that. So maybe we can help a lot of people. So very, very under represented in gold and silver. So you and I are bullish on gold and silver and platinum, especially at current prices, which are suppressed. We are very, very bullish on silver relative to gold. The ratio is way out of whack. I think it's about 80 to 1 right now. It takes about 80 ounces of silver to buy 1 ounce of gold. There is no shortage of gold. Silver is very tight. There is no shortage of gold. So relatively speaking, I know you said the other day most of your, 90% of your sales are silver for a reason. I mean, gold is attractive, platinum's attractive, but silver, my goodness, when this happens, if that ratio just goes back to normal, I mean, the real money is to be made in silver. And then I want to have you explain how people can do, because I think the truth is the majority of the investing public isn't aware that they can own physical silver and gold in their IRAs, in their Roth IRAs, in their own possession. So can you speak to the ratio and why we favor silver so much? And then we'll talk a little bit about the mechanics of how people can actually do this.
Yeah, silver is the most undervalued asset on the planet, purely and simply.
Agreed.
If we go back 5,000 years and dug a big hole in the ground, we would see a 16 to 1 ratio. That's its geologic footprint. In other words, silver is, for 5,000 years, has been 16 times more abundant in nature, geologically speaking, than gold. And when you go all through time, all the way up to Sir Isaac Newton, when he was working for the mint trying to develop the ratio between gold and silver, he used 16 to 1 because it was the geologic ratio. So for the majority of our human history, if we were to draw a graph from where you are in New Jersey to where I am in Florida, I mean, you'd be all the way into almost Miami, where I live, an hour north of there, before you start to see a deviation from 16 to 1. It's a long graph of 16 to 1. And then just this little microcosm of the last few hundred years, we see it move in another direction. And I'll explain. As we approach the Industrial Revolution, call it 200 years ago, it averages roughly 42 to 1. And that has to do with logistics and the fact that gold has been viewed as more of a monetary store of value. So 42 to 1 for the last 200 years has been the average price ratio, but that mining ratio has always been 16 to 1. So let's just say the average price for 5,000 years was 16 to 1, last 200 years, 42 to 1. But here's where it gets interesting. As you mentioned, it is at roughly 80 to 1. It's only been at 80 to 1 about 1/5 of 1% of the time of the last 100 years. And it's a tiny, tiny, tiny sliver. It is a price anomaly. But Uh, More to the point, it's coming out of the ground right now at 7 to 1. It's found in nature in a form called epithermal, meaning very close to the surface. And when I say 7 to 1, for every 1 ounce of gold they mine, they pull out 7 ounces of silver. But
And it,
remember,
and it used to be 16. It's 7 to 1
correct,
now.
it's depleting because it's found so close to the surface. The big deposits were found decades ago, long before the advent of advanced imagery. So depleted that of the, let's call it 1 billion ounces that were mined last year, only 350 million of the 1 billion, 35%, came from companies that specifically mine silver. The other 65% or 650 million came from companies who have no business at all mining silver. They mine other materials and stumble across silver deposits. So if you put that in context, of all the silver being mined, only roughly 3 out of 10 ounces come from companies that specifically mine silver. It is a depleting asset. And it's an asset that's seen expansion in use cases where solar panels by the year 2050, they're estimating could eradicate all of the silver stockpiles. That's before electric vehicles and before all the digital applications. Anything that conducts electricity or is electronic, your iPhone, your iPad, your flat screen that we're talking on right now, your computer monitor, the simple light switch, let alone the Tesla batteries and the 500 ounces of silver in the tip of every Tomahawk cruise missile that they fire off like candy over in the Ukraine. All of these
Right.
things that use silver from an industrial standpoint give demand to it. But what's truly unusual with any commodity is the duality of that demand. In other words, most commodities have one demand, like copper is primarily industrial, gold is primarily monetary. Yes, both have some crossover, but silver is a massively expanding metal for industry and has experienced a renaissance in monetary demand over the last 3 years globally. And you can see its importance when a country like India is importing 300 million ounces of it. So you put it all together, you have a depletion in mine supply, an increase in demand, and an anomaly in price that is arguably over 11 times what the geologic footprint is, what the mining ratio is. From a standpoint of analyzing it as an advisor, from a financial perspective, it ticks all the boxes. Drawdown in supply, increase in demand, and completely distorted from not only its price ratio of hundreds, if not thousands of years, but also its geologic ratio. There is not a better setup, in my opinion. And what is betraying the price is the drawdown in supplies to what ultimately is, if not, the lowest levels of available inventory ever. So it truly is a special setup for an investment. And in a world where asset prices have been distorted to hell to the upside, these have been suppressed to the downside because of the relevance and what they mean to the whole dollar system. So yeah, I don't think there's a better place to put your money, Bob. And I try to be as objective as I possibly can. And I look at it as really the opportunity of a generation or the value of a generation. And if you want to take the word opportunity out because it implies, well, maybe I'm vested in the fact that I own a precious metals company. I
Right.
don't, and I'm not. I'm trying to be sincere. It is the value of a generation, and I'd like someone to poke holes in it because I can't see any, to be honest with you.
No, I agree. And let's talk about that because you and I always prefer that people buy physical silver or gold before they buy paper. How do we answer if somebody says, well, I'll just go buy an ETF or mining shares? Now, you own a precious metals firm, so we could argue you're talking your book, but I know you a long time and you're a fair guy, and you and I are both very bullish on mining shares and ETFs. Why do we want everybody to own some physical silver and gold before they go to the paper?
Because I mean, if things get real bad, do you want stock in Kellogg's or boxes of Frosted Flakes? I mean, when you talk about a world where counterparty risk, I think will become more and more prevalent. When you talk about what can happen with the systemic risk of everything and how everyone is tied together and credit default swaps and all of these things that
Derivatives, yeah.
tie the whole financial world to get together. And when you talk about the value of a derivative, which is supposedly over $250 billion, the whole way you value a derivative is that the counterparty, whoever owns the other side of that derivative, has to be able to perform. Well, if they can't perform because they're insolvent or bankrupt, the daisy chain of forfeitures and bankruptcies and problems begins to accelerate. So when you talk about gold and silver physically held, they're the only assets, really, in my mind, that are not simultaneously someone else's liability, that have great liquidity. You could take a 1 ounce silver coin to any corner of the globe, and I don't care what language they speak, wherever you are, pick a spot. If there's another human being there, they'll understand what it is without even being able to tell you what it is in your own language. Same thing with gold. And so having physical gold and silver removes any and all counterparty risk. And I think it's very important because, look, when you own the paper form of it, let's talk an ETF. I mean, you can't take possession of it, first and foremost. So it's a price representation of it. It's not the real thing. When you talk a mining share, it's like a second cousin to the physical gold. Yeah, they're related, but one is, leveraged and can make you wealthy, can also, kill your wealth when it goes the other way. Gold and silver belong in the base of your pyramid. Physical gold and silver as a very non-subjective, liquids, conservative thing. The mining shares up on top, those are speculative. And a small portion in the 10% tip of your pyramid of mining shares can make you very wealthy, but they're not the same thing as the physical gold and silver, and nor are the ETFs, just a price representation. So while I think, it's okay to own the ETFs, I would not own them until I had a physical
Right.
position in hand.
Agreed. So let's talk about that. So for people who don't know, there are several IRS approved custodians who will allow you to buy it in your IRA or your Roth. Roth might be better place to own it or convert it. Can you speak to the mechanics? I know several years ago you referred us to a couple of these custodians, and the process is somebody opens an account. Fidelity and Schwab and Merrill Lynch are not going to do this. They want to own paper only for you for their convenience. They're not going to do alternative investments like the precious metals. So the custodian, you open an account, you transfer in money or deposit money. We call you, we buy precious metals. You ship them to a depository. People are funny. I guess they don't realize what they're paying on their mutual funds in terms of fees. Some of the fees they see, some of them they don't. We get complaints about storage fees, but the truth is, the storage fees, one of the storage groups that you gave us, I think is 0.37, like a fraction of 1%. It's tiny. And I know you use Brinks and some other big names. The storage fees per year are the equivalent of your fees to hold your mutual funds or whatever. And they're fairly nominal, are they not?
Actually, less than PHYS. If you're talking ETFs, my favorite in gold and silver would be PHYS and PSLV, the Sprott funds. I believe those management fees are 60 basis points. And on GLD and SLV, last I looked, I believe they're 40 basis points, maybe even higher now. But the point of it is that you are paying more in management fees that you don't even realize because it just gets siphoned out of your account than you are in storage fees at any of the IRA approved depositories, and you own the real thing. The key to the precious metals IRA, Bob, in my opinion, is the distribution phase where, in a traditional IRA, when let's say you own Apple stock and it comes time to taking a distribution or a liquidation, you have to sell the Apple stock. The money gets transferred into your account. You take a distribution in cash. You can do the same thing with precious metals. You can sell them. Money goes into your account. You can buy Apple stock or whatever you want, or take a cash distribution, or you can take an in-kind distribution, which is just what it sounds like. Give me my silver, ship it to me, send it to me. So the metal that's being held in your account may be distributed if you wish. It's a taxable event unless it's a Roth IRA, as you mentioned, and that's the reason I know that you like the Roth, because you can then distribute the funds without any tax gains, and that's smart. But whether it's traditional or Roth, one of the options is to be able to distribute the funds in kind, if you wish, in the metal being held for you. And I think it's really the key to the whole IRA, because look, if you believe enough in it to own it within your IRA, the ability to take possession if you so desire, regardless of it being a taxable event or not, is beneficial. we live in a world where times are crazy and tenuous. And if the last 3 years have taught us anything, it's that anything can happen. So in the example here, you could wake up on a Monday morning, roll over and say to your wife or whatnot, "Hey, I just I don't like this. What's coming? Let's go pick up our metal. Get in your car and drive to the depository, pick it up, or call us and them and say have it shipped back." Point of it is, it's like that. If you want it, it's yours. That is the key to the precious metals IRA. It gives you options, a whole layer of options that other people won't have in a traditional IRA, because if you own Exxon Mobil, it's not like you can request barrels of oil to be delivered to you in a
Right, right.
distribution. I think it's cool. And I think a lot of people that I work with, even if they didn't set it up for that reason, end up taking possession of the metal in the end. So it's a neat feature if you want, or you go back to cash and choose a different investment.
Sure. Either way. And of course, you could certainly we buy a lot of precious metals and own them individually or joint, ship them or store them. All right, so let's finish up with that idea. I hate to even bring it up, but you and I have studied hyperinflation, and I'm not predicting it, but we know that throughout history it does happen. Venezuela, most recently, Zimbabwe, Germany, obviously, Greece. It's been all over the place. And it's when prices rise every day and people lose faith in the fiat currency. God forbid, because I think other than a war, a hyperinflation is the worst thing a country can go through. We've seen predictions from some of the silver analysts we follow of silver going into the hundreds or gold going into the thousands. Can that happen if the dollar, and we'll finish with this idea, the BRICS, which is Brazil, Russia, India, China, South Africa, and more recently, I guess, we're looking at Argentina, Thailand, Nigeria. There's other countries coming in. Long time, the dollar has enjoyed hegemony against all these other currencies, the reserve currency. There's been predictions for years that the dollar is going to lose that perch, that important perch. And we've been spoiled, right, in terms of gasoline and, having the world's reserve currency. The Americans have enjoyed nice low prices. What's your thought in terms of a hedge? We know people are underrepresented in fine art and farmland and energy and timber, and certainly in precious metals. So we like all those alternative hard assets, right? Dollar hedges, get some money. You think about it, people's income from their jobs, from their portfolio, their houses, their assets, everything's in the dollar. They don't really think about it. All their wealth is in the dollar, which has some trouble coming, right? We don't know how much. So again, God forbid, but is there a case to be made, in your view, that we could actually see silver trade into the hundreds in the next few years, 5 or 10 years? If that doesn't happen, could silver and gold be, we hear this phrase, a lost decade, right? We periodically lose a decade in paper. It just happens. There's bad cycles, 5 or 10, 15 years. Is it possible that the metals are the best asset to own the next 5 or 10, 15 years, and they can go kind of bananas more than we're even speaking about just as a hedge?
Yeah, there's no question about it. Look, I think most of the analysts right now are talking gold at or above $3,000 next year, and these are mainstream analysts. $2,500 an ounce. If we take 2,500, let's be conservative, 2,500, and we'll divide it by 42, which would be the 200-year average. 2,500 by 42 is 59 and a half. But how about 2,500 divided by 7, the geologic ratio? That's 357 an ounce. How about 3,000 divided by 7, the geologic ratio? That's $428 an ounce. Is it crazy? No, I don't think it's crazy at all, because when you witness the drawdown in supply, a lot of it going to the BRICS nations, and realize that it's massively needed in such an industrial capacity and desired in a monetary capacity, at some point, the geologic ratio, what you can pull it out of the ground at, has to move into line with reality in terms of its price. And so if you were to use that 7-to-1 ultimate ratio, when the above ground stockpiles are diminished enough to where industry and monetary demand are in a war for what little scraps are left, at some point, that ratio has to find symmetry with reality. So yeah, $400 silver. Look, when I started in this industry, Bob, the first conference I went to in 1990, the Dow Jones was 2,100, and the Japanese Nikkei was nearly 40,000. And they owned Rockefeller Center, Pebble Beach, golf course, casinos in Vegas, ski resorts in Colorado. They made anything with a motherboard or an engine far better than we did. And I've watched that market with their interest rates at or near zero for the past 30 years, not even get back to roughly 2/3 of where it was at in when I started. And I watched the Dow Jones go from 2,100 to 35,000 or wherever the heck it ended up. And that the first conference I went to in 1990, the guy was laughed off the stage when he said it would go to 10,000. The moral of the story is that I have learned one absolute, only one in 33 years of business and finance, and that is that bull markets go higher than anyone ever thinks possible, and conversely, bear markets will fall further. So when you talk about silver, which is a massively industrial metal, when you talk the biggest money in the world front running the acquisition of it, draining the available stockpiles down to all-time lows, when you see an anomaly in its price relationship historically and its geological relationship historically, an extension, a massive increase in its demand industrially. I mean, everything is lining up for silver to go higher than anyone thinks possible. And in a world where the dollar starts to lose value, remember, gold and silver are at, especially gold, at or near or above all-time highs in almost every currency on the planet. You take away the dollar's inordinate and unjustified strength as countries like the BRICS nations are this far away from issuing a gold-backed or commodity-backed new BRICS nations currency, as we are this far away from losing the petrol reserve status, because what makes the dollar the world reserve is the protection of the Saudi kingdom. And now Saudi Arabia has just announced they are joining BRICS. And why would they want to stay with us when all of the countries in the Belt Road Initiative and the Shanghai Cooperation Organization and in BRICS account for roughly 80% of human population? And we are talking about going away from fossil fuels. Why would they want to still get paid only in dollars globally through OPEC? And if you look closely, you can see that is ending. And all of these countries are striking deals to sell their energy for anything other than dollars. And when that switch gets flipped like that, and Saudi Arabia stands arm in arm with all 13 OPEC producing countries on the Belt Road Initiative, all on it, we're not, arm in arm on a stage and say, we've decided to join the BRICS nations, as we've recently told the world, and we're going to only take oil payments in the new BRICS currency. And bang, like that, it's over. The dollars get dumped, hit our shore, creating hyperinflation in a manner that will be a religious experience. And when you see that type of hyperinflation, the first thing that happens is that interest rates spike to the moon to be commensurate for the loss in purchasing power of the dollar. And when that happens, everything in this country that makes people feel wealthy, which is inversely correlated to that rise, collapses. This is hyperinflation. This is the worst possible outcome, heaven forbid. But yeah, this is why you own gold and silver, not to become wealthy. Might make you wealthy if you own enough of it. It is because we are in the midst of things where you can actually have a discussion and extrapolate the reality of, could there be hyperinflation? Could the dollar lose its reserve status? This is about a once in a generation change in the global macroeconomic system. So yeah, I don't sell gold and silver to anyone to get wealthy. I sell it because it is wealth. It's been wealth that's outlived 2 world wars, German hyperinflation, the Great Depression, and every pandemic, and it's still immutable wealth. And the biggest money in the world is accumulating it, using the price to cover their massive de-dollarization and accumulation. What you are doing as a financial advisor, stepping out of what most advisors would consider to be their comfort zone and recommending physical precious metals as a gift to your clients, because you're seeing in real terms what could happen. And if not, well, you hold wealth that has been valued that way for 5,000 years and you give it to your children someday, and know that in the year 3000, when your great-great-great-grandchildren are using it, and the bills in your wallet right now and mine are hanging from a frame in the Smithsonian, example of what was, it'll still be immutable wealth. That's what it's all about in reality, to me.
No, that's a great way to finish. So even if things don't fall apart, hopefully they don't, a small percentage makes sense. And you gave me a couple examples, which I think we can finish with. 100 years ago, a 1 ounce of gold, a $20 gold piece, bought a man a decent suit. 100 years later, there you go. 100 years later, 1 ounce of gold, about $1,800, buys a man a good suit. Right now, it takes 1,800. There you go. 1,800 pieces of paper to equate to the same thing of the 1 ounce. And then I think you gave me an example of 1 ounce of silver buying so many gallons of gas 50 years ago. And guess what? The same thing. So the paper over time loses value. That's what we're trying to convey to people. Sometimes it's fast and worrisome. Sometimes it's just steady. But getting some money out of the dollar and into physical metals first, and then maybe some paper is good. But so listen, thank you. I think it makes a lot of sense. We live in exciting times, for sure. And we'll catch it.
Curse, may you live in interesting times, the Chinese curse. So
right.
I'm happy with dull and complacent.
We are here in interesting times. Next time we do this, maybe we can do a little deeper dive. I wanted it to be educational and just have you convey that, hey, look, we can ship it to your house. If it's non-qualified money, we can hold these things in an IRA, in a Roth. We can convert them. We can send them out. So it's just, I think people didn't realize that this is very easy to do and fairly cheap to do. You don't have to have all your money in paper. So listen, thank you so much. Great to see you. And we'll talk soon. Thank you.
You will.
All right. Take care. Bye-bye.